Today I want to give you a quick update on Adamant.finance. There's been a little bit of FUD going on that may or may not be warranted. I'll give you the info that I have and you can decide for yourself. We'll cover that a little bit later in the video. Adamant.finance has been probably one of the more profitable projects I've been involved with in the Polygon network. It's done really, really well. At this point, I have done so well that if they crashed and burned, it wouldn't matter. And I tell you that only because it's important to have perspective of my commentary. If I was brand new getting started on Adamant.finance, I would probably take a much different approach than what I'm currently taking right now at this very moment. So nothing in this video should be considered financial advice. You need to make your own decisions for yourself. If you're following financial advice for YouTubers, then you need to go to mommy and daddy and have them take over your finances. Let's continue on. The Adamant token is holding up at about $36. That's important. I'll explain why here in a moment. What is Adamant? Now, first of all, we're yield farming, and Adamant is simply a yield farming aggregator. Now, if you don't know what yield farming is, I did an entire video where I explained yield farming on the Binance Smart Chain and the mechanics of how it works. Those mechanics work identical here on the Polygon network. So if you want to understand what exactly yield farming is, I'll link that video above. I'll put it down in the description and you can watch that video. And that will get you caught up on just understanding what yield farming is. Now, I did do a full tutorial on Adamant.finance early on when I started using it several weeks ago. I'll link that video above as well because this is not going to be a full tutorial. I'll put that video in the description. You can watch that as well just to make certain that you're caught up. Now, if you have, after watching those videos, if you have any questions, just ask those questions on the comments of those videos and I'll be able to address that for you. What makes Adamant unique is their tokenomics. So first and foremost, Adamant allows you to do two things that are very important. We'll get back to the tokenomics. One is you get access to all of these various yield farming vaults. These are primarily exchanges: the QuickSwap exchange, the Cometh exchange, SushiSwap, ElkSwap, Key, Curve, Walt, Augury, ApeSwap, Polyliquidity, however you say that. And then of course these crazy degens, which we'll get to that in a moment. That deserves its own section because this is an update to the platform. On all of these exchanges, you're providing liquidity. Then you're able to take your LP token, which I explain that as a claim check, if you will, and you can stake that on the Adamant platform. First thing that Adamant does is allows you to aggregate all these exchanges in one spot. So you can literally get into all the different exchanges just coming to one website. The second thing that it does, which is the most important thing, is it auto compounds your earnings. So for example, if you stake on QuickSwap, you're probably going to get the Quick token, for example. And Cometh probably has the Come token. Is that real? SushiSwap has a Sushi token, ElkSwap has the Elk token, and so on and so forth. Walt has the Walt token. If you were to just go there and stake, you would get their native token. What Adamant does, typically when you come to QuickSwap, for example, you would take your quick rewards. Every so often you would sell them, and you would go back. So let's just say you were yield farming 2 stable coins. Every day you would get some quick rewards. You would sell those quick rewards, or every week or every month, whatever. You would sell those quick rewards. You'd buy your 2 stable coins and restake them again. If that doesn't make sense to you, go watch my video on yield farming. Adamant does all of that for you, and you're able to yield farm on multiple different exchanges all at once. So to give you an example, I'm in this Key My token. By the way, somebody said, I don't see the Matic. They changed the name to the My token, the project did, but QuickSwap still calls it Matic. So that's the same thing. So if I was to stake directly to QuickSwap, I would earn quick rewards. And then every day I could withdraw those rewards. I would get the Quick token. I could sell those rewards for Key, and then I could take half that Key and sell it for Matic and add it back to the pool. And that would slowly compound over time. Inside the Adamant vault, I don't have to do that. It automatically does it for me. This 1723, a couple times a day, several times a day, however, it depends on the vault. But it goes up. You will see that this number will go up steady all by itself. All by itself. The APYs are incredible. And what it's doing is compounding my LP tokens. And I don't have to do anything for it. And that's what every vault does. So there's 2 reasons to use Adamant. One is, well, there's a lot of reasons, but one is because you get access to all the different exchanges in one area. The second reason to use it is because it auto compounds for you. Now, this auto compounding, there is a little bit of a catch. They charge a fee for it. They charge a 30% fee, which is fine because I still earn more with them auto compounding, paying the fee, than I would earn waiting to do it on my own, and it saves me the headache of having to constantly doing it on my own. But for their 30% fee, where does the fee go? It goes to everyone who's holding the Adamant tokens. That's what makes this thing incredible. So just for having what they call the Addy token, you earn performance fees. Now, to give you an idea, I currently have 138 plus 20, so I have about 158 tokens roughly. This hasn't been 24 hours yet, but I've gotten 17 Matic. That's crazy. That's a performance fee. I get close to 30 Matic a day. In fact, if you come over here, the wrap Matic is what you get paid in. All of this has come from Adamant.finance. Plus, I think I had probably another 200 that I sold previously early on. And I just keep stacking it every single day. I'm literally earning free Matic. And I've already made all of my money on Adamant. Like, I've made everything I've invested. I've already made profits. I've pulled out profits, etc. So this is going to be a free income stream for me long term. Now, you get Addy rewards as well. I'll get to that in a minute. Now, you will notice that one of the things I do, because again, I've pulled funds out, I go into higher APY projects. What I know about the key project, I kind of like, so I don't mind providing liquidity for that. This is not financial advice. I'm not encouraging you to do this at all. There is some legitimate FUD about the Adamant.finance protocol. I'm going to share that with you in a moment. Again, do not take financial advice from a YouTuber. So I always look at the APY and I look at what is their Addy rewards. And that honestly goes into my decision to go into a project. If I think it's going to go up, if I think it's going to go down, I look at that. This project here, this Yale token, this is a new project. I primarily got in because the APY was quite high and I was looking to earn more. If you look right there under APR, 359% Addy rewards. I'm wanting to earn those Addy rewards. So that's why I came in. Now, I came in with about $2,600, so I'm down a little bit. I'll continue to keep an eye on this. If it goes down to 2,000, I'll probably go ahead and pull out. At that point, I don't want to lose any more money. The key Matic pool for now has done well for me, but all that is subject to change. Now, these tend to be a little bit more degen. I even call this a little degen. So if you're someone who's risk adverse, that's not the kind of thing. You wouldn't be in crypto in the first place. You definitely wouldn't be yield farming. Degen pools are just that. They can be considered degenerate. They have this degen tab they've added, and this is all their crazy high risk pools. I think to be degen, it has to be over 20,000%, I think, or maybe it's 50,000. Anyway, well, there's one that's 3,000. They're saying it's degen as well. What's interesting about these degen pools is they don't all give Addy rewards. It doesn't even matter to me if it doesn't give Addy rewards. Yale does. This PZAP doesn't. Crystal, I don't know anything about Crystal. That's 1.9 million. That's nuts. There's $186,000 in there too. That's kind of crazy. This one's got 239. This is the one I'm in, obviously. And again, I hopped into it because I was just pulling some funds in because I wanted to see if I could farm the Addy token a little bit faster. Part of the Addy tokenomics is important to understand. There's basically 3 stages to your Addy tokens. For being into the pool, you're going to earn Addy rewards. They mint new tokens every day. Those new tokens are right here. Every 3 months, I can withdraw these tokens. They're considered vested, and this is the withdrawal schedule. Every 3 months, I can withdraw with no penalty. I can withdraw early with a 50% penalty. What happens to that? Where does that 50% penalty go? I'll explain in a moment. But just know that new tokens are minted. Once they're minted, you cannot sell without paying a 50% penalty. This is important because it helps prevent people from just dumping on the market all at once. However, even when they're vested, I'm still earning the Matic rewards. This counts towards my earnings. So I don't lose anything for them being vested. At this point, I don't claim for a penalty, as you can obviously see. Once the 3 months is up, then you have a choice. You can sell them, you can stake them, or you can stake and lock. If you stake them, you can unlock them at any point in time, but you continue to earn performance fees if you stake them. That's the whole point. Right now, it's at 136% APR. That's what this wrap Matic is right here. If you stake and lock, as you can see, I have some locked right here. If you stake and lock, they're locked for 3 months. You earn the same 136% APR on wrap Matic, but you also get Addy rewards. Where did these Addy rewards come from? Remember up here where I said that if you claim, you get a 50% penalty? That 50% penalty gets distributed to everyone that has locked Addies. I'm not currently locking any more. Every now and again I'll do a withdrawal and lock some, but what I'm really doing right now is I'm not claiming for a penalty because at this point I'm just holding kind of for more long-term. I think this price is probably going to come down or may not. It goes from like 32, 31 to 39 this morning. It moves around a lot, but it's been in the 30s for the past several days. So maybe we're finding a bottom in the price. I'm not really sure. The price may come down further. It doesn't really matter to me. I'm getting rewards for it. I want to keep getting those rewards. When these Addy unlock, at that point, I'll probably continue to lock them. That's my thought right now. That may change in the future. These rewards right now that I'm getting, about every day, I'll claim these dividends and I'll take these Addy and I'll sell them. However, when I sell those Addy, I come over here and I end up adding it to one of my pools manually. And it's been this one the most, but this is a newer pool for me, so I may come in here. I'll just have to see how it continues to perform. Let me explain that again. what I'm doing, and then I'll cover the FUD about the project because there's legitimate FUD. What I'm doing is I'm not claiming for a penalty any longer. I did that early on because the rewards were so high. I mean, early on, we were getting like 1,400% right here. I claim dividends at least once a day. My Addy tokens, I sell them, and I come back into one of these pools right here. That's what I've been doing. And right now, I'm sitting at, just over $7,600 in here. I'll continue to watch this yield. I may pull out of the yield degen pool here. I may pull out of this later. We'll just have to wait and see. Now, let's talk about some of the FUD. I've gotten several comments about this, and it's worth being aware of, but unfortunately, most people comment. Listen, if you want to be smarter than the average investor, all you have to do is go look at more than one source for information. I mean, most people look at one source for information and they're done. So there's a little bit of FUD, and I get people, I put this in my comments all the time. So this comes from a website called RugDoc. And RugDoc kind of does some informal audits. What most people don't realize is RugDoc has considered things low risk before and been wrong. You got to take it with a grain of salt. I think it's a great resource. It's a good pre-screening resource. Now, the reason I went into Adamant, I didn't even care what RugDoc said at the time. I hopped into Adamant because the rewards are really, really high. And I figured, hey, high risk or not, I'm going to get out what I'm putting in at the time. Rewards are not that high now. Also, the friend of mine who told me about Adamant said the devs are extremely communicatable in the Telegram. That's always a pretty good sign. Again, it's not a guarantee, just like RugDoc's not a guarantee. So the devs have addressed this repeatedly, and I just want to first show you what RugDoc has said and then what the devs have said. The devs have a formal audit that is supposed to be underway. I'll mention that as well. Update. Since Polygon Scan came out, we were thinking they would verify their strats, but they still have not. For example, so on and so forth. Thus, there are no further updates. Update number 2. We've marked this as high risk because their strategy contract is unverified. The current MS has the ability to, Master Chef has the ability to add withdrawal penalty to emergency withdrawal, which is absolutely horrendous. There's a migrate function that allows them to switch out contracts. Vault for Polygon. Spot checked most popular vault of Iron. This is important to see. They spot checked. Most people miss that. Most popular vault of Iron USDC, and it is unverified. Now, this is bold, and this is important. A good perspective because Iron USDC is over with. We'll come back to this. Therefore, a black box as to what the underlying code contains. Asked in their Telegram about verifying it, they said they are not able to verify it, and that's the end of it. Has a tech rate audit of their GitHub, which is completely insufficient in scope for the complexity of the projects. Plus, you don't even know if they deployed the smart contracts because, once again, everything is unverified. Newish vault, plus unverified contracts, plus insufficient audit, plus existing operational governance type of risk involved in these types of risk equals highest risk of grade of project. Mitigating factors. This is important. It honestly is very, all caps, where do their bold go, by the way? It honestly is very hard, if not difficult, to verify a code this complex on Matic Virgil. This is the Polygon network. The Explorer is very limited, and verification is hard for even basic projects. The GitHub code is indeed clean looking, and no overt rug found on inspection. Team has a large cross-chain solid reputation. So they put this in there. If you read it up here and you're easily scared away, it's like, what in the world's going on here? They said the team has a solid reputation. The team has a large reputation, no overt rugs based on GitHub. They say that it's insufficient to the tech grade is because it's so complex. But then they come up here and they say they spot check the most popular, which means they didn't check any of the rest. But yet they came up here and put a high risk. I mean, you got to put all this into perspective. Now, I'm not saying it's not high risk. That's not what I'm saying. I'm saying you got to be able to read everything objectionably. Adamant has responded to this, and I'm going to show you their response. But let me just tell you what they did with Iron USDC pool. So when that project collapsed, they immediately removed their fees. They stopped charging, obviously, performance fees. People were able to withdraw very easily. They communicated through that process the entire time. In fact, every single time that I've seen there's been an issue with a farm, because they add all sorts of farms. Anytime I've seen an issue, which there's only one other farm, the dev team has been very communicative in Telegram. They have, said, hey, we're reaching out to the dev team about this. We're doing this. This is what you can expect. This part's out of our hands. Here's what we're still working on. Communication and previous track record, I put a lot of weight in that. Plus reputation, but I don't really know the team that well, so I can't really speak to their reputation. I can just speak to their conduct so far. Now, let's see what they actually said publicly about this. The FAQ literally tells them how to view the code of the strategy contract. All they need to do is click the contract deployed by link. So the dev team has been saying the whole time, RugDoc has not actually done anything. Like, they didn't actually review anything. They didn't really try to. They basically spot check. The current Master Chef has the ability to add withdrawal penalty to emergency withdrawal, which is absolutely horrendous. Their response, the emergency withdrawal function in the vault-based contract has a withdrawal fee because people would be able to evade the withdrawal fee by claiming any pending Addy and then calling that function if it didn't have a withdrawal fee. Listen, this sounds good to me. I'm not a developer, so I'm like, okay. There's a migrate function that allows them to switch out contracts. We don't have a migrate function or contract swap function in any of the vault or strategy contracts. And they show this function here, can only be used once. Again, I'm not a developer. I don't know what that means. But they are supposed to be having a CertiK audit coming on board. This audit here is pending. Now, here's where I will say something negative. Weeks ago, they said this was going to come on board. It was going to be available weeks ago. So I don't know what's going on with this. I asked in Telegram, and just another community member said, CertiK probably got back to the team, and they're probably going back and forth discussing the contract. It's complex, whatever. Maybe that's true. Maybe it's not. I don't know. At this point, I'm risk-free in Adamant. I mean, I could lose everything in these vaults, and I'm still ahead in Adamant. I did really, really well. So for me, it really doesn't matter. I'm treating it like it's going to last 100 years. Obviously, it's not. But I'm just treating it that way. If there's a trouble with anything, I should still be able to get to these rewards, hopefully. But I'm continuing to earn every single day. I'm withdrawing if nothing else, I'm withdrawing the Matic rewards every day. And I'm not buying any more Addy tokens for now. I bought a lot of Addy tokens early on, and I bought them because the rewards were just so high. And I understood with the vesting period and the locking period, it helped prevent people from dumping. It's a very strong incentive to prevent people from just dumping their tokens, which I thought was a good idea. That's my update on Adamant.finance. That's my view on some of the FUD. Again, I'm not encouraging you to get into Adamant.finance at all. They have a Telegram. I do have a video where I talked about like safer yield farming, and I use Adamant as an example, but you can use that strategy with any yield farming that exists on any network, and it's primarily how to yield farm using stable coins, and it kind of walks you through specifically on providing liquidity. What's that mechanic look like? How do you do it? And then it goes further, shows you how to withdraw your liquidity. So if you're trying to say, how do I get out of a certain pool, or how do I get out of this or get out of that, then make certain you go watch that video. I'll link it above. I'll put it down in the description as well. Ladies and gentlemen, decentralized finance is exciting. It offers incredible returns. And outside of trading cryptocurrency, I don't know of anything else that could be more profitable. However, it carries a tremendous amount of risk, and you want to be aware of that. On my channel, I'll be blunt with you. I'll be upfront with you on my thoughts. Obviously, I'm biased, but I do my best to be objective. I do my best to be forthright and honest. Adamant has never sponsored my channel, but if I ever accept sponsors, I always disclose that up front to my viewers. If you appreciate that, do me a favor and smash that like button. Thank you so much for watching today, ladies and gentlemen. Decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.